Well, in just a few minutes, Jerome Powell, the chairman of the Fed, changed everything with his latest speech to Congress. In this video, we'll discuss how Powell's remarks have caused the markets to shift their expectations and what it means for investors like you.
I'm Kiwi of the coast, the agent with the most.
Helping you maximize and sell the value of your coastal home. So let's dive in. So in his semi-annual testimony to Congress, Powell set out this new paradigm on how the Fed was going to deal with interest rates. And apparently what we're going to see out of this is that interest rates are going to be higher for a longer period of time than what was expected. So as a result, the market has been forced to recalibrate its thinking moving forward. So Powell's appearance before the Senate Banking Committee and House Financial Services Committee caused a major shift in the Fed's expectations for their upcoming meeting. Now, of course, the markets have been looking for a modest increase of about 0.25%. But of course, Powell's remarks suggest that the interest rate hikes are going to be higher than a quarter and at a faster pace. So of course, how's all this come about? Well, the January inflation figures showed that the economy was not slowing down as fast as the Fed would like. And of course, it's remained remarkably strong given all the Fed's efforts to try and do the opposite, that slow it down. So this is why we see Powell's decision to a more aggressive stance with respect to interest rates. So Goldman Sachs, of course, is holding firm on their predictions that the interest rates that the Feds are going to increase would be only 0.25 point. But they concede that this is a close call between 0.25% and 0.5% hike. Powell has faced questions and criticism over this federal tightening and the increase in interest rates. The reason being is people are worried that those working class families are going to be hurt the most, and of course the ability for first-time homebuyers to jump into the housing market. Many chief economists are advising the Fed to increase their rate more aggressively to that 0.5 point to combat those inflationary pressures. Powell's going to watch closely all the data that's coming from non-farm payrolls, consumer and price indexes before he makes his final decision. For the moment, markets are pricing in higher interest rates already, with traders in the futures market pricing in a terminal rate of 5.625% in the coming year. Economists like Nomura warn that the job openings that were referenced in January outnumbered available workers 1.9 to 1. And this could push the Fed into further tightening, including adjustments to its program to slash its bond portfolio. So what does it all mean for you as the consumer? Well, you've got to keep a close eye on all the data and stay informed on the Fed's decisions that are going to affect your portfolio directly. Be sure to subscribe to our channel so that I can keep you up to date on all the market changes and insight into what is going on. Click on the video that's on your screen now so you can watch the next video in the series. Varum.